Hi, this is James Shug at Westpac with the end of day report for Friday, April the 27th. Got to be a quickie today and do need to dash, so I'll just run through the news events of the day. Started off badly in Europe with Spain downgraded 2 notches by S&P from A to BBB+. The second downgrade by S&P of the Spanish sovereign this year. Spanish unemployment rose a couple of percentage points to just under 25% in the first quarter. Retail sales decelerated further to around a -4% pace, annual pace that is, in March. So weak news on the economy and a downgrade for the Spanish government. In terms of the US data today, it was mixed with the GDP figures for the first quarter showing a deceleration from 3% annualised in the fourth quarter of last year to 2.2% in the first quarter. Now the market had been looking for something around 2.5%. We were looking for 2%, so it's sort of the outcome actually split the difference. But it certainly was consistent with our view that there has been a moderation in the pace of growth in the US economy since the start of this year. Some of the detail was good. There was a solid rise in consumer spending, but that was mostly on autos, and we think that's largely related to the shortage of supply earlier last year after the Japanese tsunami. That's meant that auto sales have been strong most recently, having suffered because of the lack of available models earlier in 2011. That's a bit of a one-off that's going to diminish going forward. Other detail was less powerful. We had the first decline in business investment spending in a couple of years. Housing was positive, but it's from such a low base that it doesn't make that much difference to the figures, although it was up 19%, I think, and annualised that is. The report also showed that government spending was down for something like the 4th or 5th quarter in a row, and that's something that's going to be an ongoing drag on the US economy going forward. We think that today's report at around 2.2% is a better indication of where the economy is really at and going to be at for most of this year than the 3% we saw reported for the end of last year. There were earnings reports in the US today from Amazon and Expedia, 2 retailers, online retailers. Both beat analyst expectations, and that's helped the markets along. Consumer sentiment in the US was revised up on the University of Michigan index for April, and in fact the reading there is the second highest now since the recession in 2009. So that's the data and the stories today. In terms of markets, we've got the FTSE, it closed up 0.5%. The French market was up 1.1%, and the German market up 0.9% today. The Dow's got less than an hour to go, and it's up 0.3% at the moment. Commodity markets are positive, with oil up 0.2%, gold up 0.2 as well, and copper prices up 1.4% today. Oil was at $104.78 a barrel, gold at $1,664 an ounce. And the Aussie dollar, it's at 1.0473. It's been rising for a couple of days now, benefiting from the positive sentiment in equity markets, and I think, although I will warn, just to conclude, that we do think there's some bad news to come out of Europe. There has been bad news, there's more to come. At some point I think that's going to impact on markets again. Possibly next week we'll get a guide to how the ECB sees things going with the European Central Bank meeting, and of course we've got the Reserve Bank expected to cut on Tuesday as well. So some things to look forward to there. I'll be back to report them, of course. So have a good weekend.